What's up, traders? Sandro O'Connell with Pristine Capital coming at you with yet another market recap video. It is September 17th, 2021. Today was quad witching day. So that is when you have index futures, single stock futures, options futures, and single stock options futures all expiring on the same day. A lot of times it does make for a pretty crazy day of price action, and we definitely did have a crazy day of price action. So today we're going to walk through everything. We're going to go through headline indices. We're going to go under the hood. There were a lot of very interesting dynamics going on today for certain sectors that you would not expect actually finished positive on the day. We'll go through some of my trades for today. And then we'll also quickly go through our options order flow via VigTech. Quick risk disclaimer, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades or anyone's trades for that matter. All right, let's jump into the vid team. Okay, so box scores for today. S&P 500 is measured by the SPY, closed down 0.97%. We had the NASDAQ QQQ finish down 1.18%, our worst performer on the day. We had our IWM small caps finishing positive on the session. They were up 0.13%. And then we had the Dow Jones finishing down 0.52%. So what's kind of interesting, the S&P 500 and the NASDAQ, which had been our leaders, were actually laggards today in comparison to the IWM and the Dow Jones. Market breadth was, pretty poor across the board, except for the IWM with 54% advancers. I will classify this as a washout day because we only had 20% advancers in the SPY. We only had 21% in the Dow. We only had 29% in the NASDAQ. All right, let's jump into these charts. Today was absolutely wild. I certainly had a crazy trading day, to say the least. So let's jump into it. I'm just closing this out. Okay, let's go over to our S&P 500. Let's assess the damage to your team. So options expiration. A lot of times you do get price action that really has nothing to do with fundamentals. There's a lot of big options players, and they're essentially like getting their ducks in a row. They're closing out positions, they're rolling positions. There's a lot of portfolio cleanup that has to occur around OPEX day. So a lot of times it's actually very tough to even gauge what you're seeing. But take a look at the S&P 500. We've been in a short-term downtrend for the past 1, 2, 3, 4, 5, 6, 7, 8, 9. This is the 10th trading day. So we've been in this 2-week malaise where the market is really just grinding lower. And this kind of market where you're just grinding lower and slowly but steadily navigating a downtrend, these can make for very tough environments. For me, this is definitely the opposite of my ideal market conditions. So yeah, today for this price action, we ended up closing down 1.25% for the S&P 500. Overnight, we did tag this monthly value area high, and as of yesterday, it was looking like, hey, we might actually break out of this downtrend and start moving to the upside. Sure enough, we did not get that. We actually closed below the 50-day simple moving average, and it was very weird. Into the close, it was the market kept going up then down, really oscillating very quickly, and literally within the last 2 minutes of trading, the market just had a little mini collapse. Then even after hours, just kept going. And that typically, does happen for options expiration. Let's take a look at our hourly chart just because there was so much going on. So yeah, the market is definitely recognizing this downward trend channel. And you can see we were kind of flirting with the upper end of it. It looked like, hey, maybe we might break out. But then really once the session started, this is 8 o'clock, just heavy selling throughout the day. And you'll notice that we did have a little bit of a reprieve around lunchtime, but it was coming on very low volume. And we closed pretty much on the lows of the day. And then if we go over to this 5-minute chart, you'll see basically the same thing, just grinding lower throughout most of the session, getting a couple bounces in there. But at the end of the day, this is literally the last 15 minutes of trade. We had a nice spike up to 44.30 almost. This was at literally at 340. So it's looking like, okay, we're going strong into the close. Then boom, just a wave of selling, tidal wave of selling on huge volume at the very end of the day. So yeah, definitely disorienting price action, and definitely, just some ugliness at the end of the day. All right, let's take a look. We're going to go to the other indices because, yeah, the small caps, was a completely different story today. So let's take a look at the NASDAQ first. And NASDAQ chart, you can see we moved decisively below this 20-day moving average, and we also closed right on the lows. One thing that was not good for the NASDAQ that I identified very early on in the session, and I actually closed out of almost all of my risk early in the day, was these 10-year Treasury futures. They were basically like falling out of bed this morning. Like, they ended up closing in a pretty nice spot where it's basically we're reclaiming, this prior low and basically closing at a spot for max ambiguity because, on Monday, if this is well bid, that's a good thing. If not, we're just slipping into the abyss once again. But yeah, when I saw this in the morning, like, okay, these Treasury yields are blowing out to the upside, it's not a good look because this is exactly what happened in the February correction where these yields started blowing out, and that was certainly not good for tech. So I had a feeling, this could be bad for a lot of these high-flying growth names. So I started closing out of things in the morning. And along with that weakness in the Treasury market came weakness in the NASDAQ, because out of these 4 indices that I cover on a daily basis, the NASDAQ is the most closely linked with the Treasury market. So yeah, very weak close for the NASDAQ, just not a good look. And then what else did we have? Our Russell. Yeah, so it looks like the Russell, as measured by the IWM, closed positive. But I can see based off this futures contract, we ended up slipping after the bell. So we closed down 0.25%. Yeah, this chart not really looking so great. And then the dogs of the Dow. Yeah, this made a new low. And again, this is all happening like right after the bell where, these futures all just spilled lower. So we're going to have to see what happens. Next week is also Fed Wednesday. I did see a news article saying that the taper might end up getting pushed out in time just because of, I don't know, they gave like some BS excuses, but we all know what it is. When they see the markets falling apart, it's very tough for them to taper. And especially we have like the big default going on in China. Like, if they did announce, hey guys, here's the schedule for the taper, and they did that on Wednesday, that would just be, this market's gonna like fall off a cliff. And we're just gonna be right down here at this VPOC at 43.41 before we know it. So yeah, to end off on these indices, we're in a very ambiguous situation. The one thing that is good is, if we look at this SPY, so let's check this out. And I put my Bollinger Bands on. We're trading at that lower Bollinger Band. So a lot of times that it really does make for the best buying opportunities when you're buying stocks on or below that lower Bollinger Band. So from that perspective, the risk reward is good. But in terms of just the trend, yeah, this looks ugly. And what that tells us is that like up until the very end of the auction today, they were selling. So how do we know that that selling is not complete? We really don't know. We could have more selling. We could have a gap down Monday morning for all we really know. Really what I would like to see is on Monday, we need to get a bounce because it's happened before. Like for instance, back in June. So this was the June OPEX over here. And we had this same exact thing where we just spilled into the abyss below the 50-day. And then the following session, we just catapulted higher. We got that incredible bounce, and it led to an amazing rally. A similar thing kind of happened here where we tagged the 50-day. Same thing. Like, we always end up getting just these stick save rallies, and then we blast higher. This is one of the first times where, like, we tagged the 50-day. We did not get that stick save blast higher. We actually got a second leg lower. So very ambiguous market conditions to say the least. Let's dive under the hood here Let's check out our Finviz heat map. And yeah, you'll notice that, these bond proxies like Microsoft, Apple, Facebook, Google, Amazon, they were some of the hardest hit names. And it's incredibly difficult for the market to rally if those names are being sold. That's basically a signal to the rest of the market. Hey, if I see these 5 FANG names are being sold, that means I even have a low probability on any of these other names just because these are such a big weight. So they really do influence everything else. We did have some bright spots. We had TMO up 6.49%. They reported really strong earnings. Tesla was positive, Netflix. So there were a couple bright spots. And then the sectors were very, very interesting as well. So what I mean by that is, if we look, solar energy is now in our second slot in terms of sector momentum. Solar energy, which is a very speculative part of the market, was up 2.44% today. Also, the SPAC ETF was up 0.98%. And that one's been on a nice performance run. Biotech was up, which is another very risk-on area of the market. And then almost all of these ARK funds were up big as well. In terms of our biggest losers, where were our biggest losers? So semiconductors, which everyone has been piling into, like these bond proxies. They were the biggest loser that I can see. Behind materials, down 2.06%. We had utilities, which everyone has been clamoring into, down 1.54%. And what else did we have? That was a big sell-off. Technology, XLK, down 1.56%. So yeah, the bond proxies, really all sold off in a major way. And then style factors, also just a complete bloodbath. International momentum was down 1.91%. International value down big. We had quality, which really is the proxy, for like the bond substitutes, was down 1.06%. Best performing style factor was cyclicals. So that's not exactly like risk off if the cyclicals are performing best. It almost just seems like there's like a sea change happening in the market. It's happening right at OPEX, and everyone's in the wrong areas of the market, and they're all trying to shuffle into other areas very quickly, and we're just getting this, ugly sell-off. All right, let's take a look at some of my trades for today. So today I did some things very well, and I did other things horribly. So today was definitely like, for me in terms of my trading, I would give myself probably like a 4 out of 10. Today was not my best day. But let's take a look. I'll show you what I'm talking about. So in the morning, I identified very quickly that, okay, I see yields blowing out. I have a bunch of risk on. I'm going to close it out and just see what happens because I feel like I have no edge. So I closed out some Apollo common shares, closed those out for a small winner. I have Sentinel 1 shares, closed those out for a really nice winner, closed them out for 69.69. I had paid 64.25. That was from only holding this thing for 2 days. Let's check out Sentinel 1 chart. Yes, this is one I'll keep watching. But yeah, I ended up closing, well below where I sold at. And then I closed out my Palantir for 28.92. I had paid 28.78. So that one also, very, very small winner, nothing crazy. Palantir actually looked pretty decent into the close. But yeah, closed lower than where I sold it. Yeah, because I was just doing this very quickly within the first 30 minutes of trade. Closed out my MongoDB for a small winner. Closed out for 509 spot 90. I paid 506 spot 86. And closed out my SIG common shares also for a decent little winner, 83.42. I had paid 80.80. So yeah, like all those sells were pretty fantastic. On the option side, look at this. So I had so many trades today. And part of it is because, I did the same thing. I closed out a lot of risk this morning. I took this TMO call spread for 450 right at 9:31 a.m. That was like, okay, the earnings were great. Let me just add the call spread. Then I realized what was going on in the market and how weak the tape was. And that's when I started closing things out. So I had a Tesla call spread, closed that out for a very tiny winner, 10-cent winner. I had some SPY calls that I also closed out for a winner at 491. I paid 461. Crocs had some calls, closed them out for a nice 25% winner. AMD closed out for a small loser. What else did I do? I got long some SPY September 24th 444 puts. So this was when I started scalping. And in the beginning of the day, I was scalping like an animal. I was killing it. So yeah, I ended up closing out part of this scalp for a nice winner. Even more of it for an even bigger winner. Like, I was killing it in scalping. Closed out my Datadog calls for 1408. I paid 1415, so basically just a little scratch. TMO, I just backtracked on that very early in the morning. Closed it out for 335. I paid 450 because that one did close that one out for a loser, but that was okay. I was like, I added this literally 30 minutes ago. Pictures changed, that's all right. And basically what happened was I was scalping throughout the session because I was like, there's really nothing else for me to do here other than scalp. And I was hitting some very nice winners. And I was like going from puts to calls, just, really having my way with it. But then around lunchtime, this is where I started to lose some scalps. So this one was still a winner. What did I do for this one? Yeah, close this one out for a winner too. So I was killing it in the morning. Yeah, I guess I didn't do as bad as I thought. I felt like I was doing really bad. Yes, this one closed this one out for a 3-cent loser, so that's really not that bad. I got long some Q's October calls for $8.33. And yeah, this one, like, I closed this one out for 202. I'd paid 231. So it's not like it's a big loser, but towards the end of the day, I started to lose my edge in these scalps. Won a little scalp here. And then towards the end of the session, I closed this one out for 166. I'd paid 179. And I just put it was better to day trade earlier in the day when it was actually moving. Now it's just bouncing around in a tight range, staying away. So towards the end of the day, I lost maybe like 2 scalps in a row. And I was like, forget this. It's just too hard for me to scalp right now. But my scalping, surprisingly, has been like a really nice source of my P&L throughout this 2-week chop period. And like, I'm normally not a scalper. Scalping is not really like my jam. It's not really what I do. But I'm starting to develop that ability, and it's coming in handy very nicely for these chop days where like I'll just be on the 5-minute chart and I'll just be going to town. But I think for today, a nice little learning lesson for me is, if I hit 3 really nice scalp winners in a row, then I lose one, then just quit for the day. If you win 3, you don't want to go ahead and then lose 3. So that was something where like I'm just not used to being in this kind of environment, just going crazy on the day time frame. But it's definitely a skill I want to keep developing. So I just want to keep going with that scalping and add that little rule. And then another rule, if you lose a scalp, then just get up from the desk. I think that'll help a lot too. But I did a lot of that. And then I did take some calls into the close. So I took some Facebook October calls. I took some SPY October calls. So we will see how that plays out. I was like, what? We're at the lower Bollinger Band. Historically, that's a pretty good risk reward. What I need to do for next week, though, is if that trade does not work and, it just doesn't work, we gap lower, we're just looking horrible, I just need to very quickly pivot out of that risk. Because I know, like, none of us like to take losers. It's the worst thing in the world. It's like, oh man, I lost the trade. It sucks. But what's even worse is when you're positioning correctly and you're keeping trades on just to keep them on because you don't want to be wrong. So for next week, do I really have much of an edge as to what's going to happen? No way. This is so ambiguous. I can't say we're in a good trend. We could easily get one of these days where we just explode to the upside. We could easily just get a gap down and be trading, below this value area low. So, I'm going to behave accordingly. I just need to make sure that, hey, don't get attached to a bias. Don't get your ego involved and just, finish the mission. It's all about just getting the results and making sure that you're protecting, your capital. That's really all it's about. Of course, I am going to be doing a ton of weekend analysis to gather more intelligence on, what the market trends are looking like, what the sentiment is looking like. That's going to be huge, and what the positioning is going to be looking like. I'm going to be sharing those videos with Pristine Capital members. Feel free to sign up for the Pristine Capital trading community if you are interested, if you enjoy this kind of analysis, and if you enjoy working in a team setting as you're trading. You like the support, you like the collaboration, all that good stuff. But with that being said, that about does it for this market recap video. Another big thing before we wrap, make sure if you made mistakes during this trading week, which we all did, I would say I was doing very well today. I hit a few little snags in process and whatever. First thing, you have to look at what you did wrong, figure that out, realize, okay, here's what I need to do to get better, create a little plan for yourself. Then you have to forget about those mistakes. And then you have to move on. And then you have to have a nice break for the weekend and just hang out with your family, hang out with your friends, have a nice barbecue, whatever you want. My girlfriend, she's doing her MBA at Villanova. So we're actually going to go to Villanova tonight. She's going to do some homework, and I'm going to do, just some work. I'm probably going to start my weekend analysis and whatever, and really just my post analysis of my trading. But yeah, I hope everyone, just get a nice break, chill, eat some good food, relax. If you can get a workout, do that. This market environment is very challenging, but we are going to get through this environment, and we're going to be ready for some better seasonality at the end of the year. Have a good weekend, everyone. I'll see you all on Monday.